Hello, I'm Teresa and I am a Chartered Financial Planner at Helm Godfrey. And today I'm going to be talking about equity release. The areas which I am going to tell you about are firstly what equity release is, the different types of equity release schemes which are available because there are many different options, when you might consider equity release, the need for financial advice. It's very important that you get financial advice when looking at equity release, and also you need legal advice. And the regulation and also the safeguards which are in place. And finally, why the demand for equity release is increasing. So, what is equity release? Equity release is a way of taking the cash out of your home when you still want to live in it. Lots of people are cash poor, but they have a very valuable house. One important thing to bear in mind if you are interested in equity release is that you have to be of a certain age, and that is usually over 55. So there are different schemes and there are a choice of options which are available to you, which could be a cash lump sum, or you can have the opportunity to take money out as and when you need it. This can be also set up on a regular basis if you wish, and you can also combine these options. So you could take a lump sum and you could then have a cash reserve which you can draw on later when you require it. So there are two main types of equity release. The first are lifetime mortgages. This is when you take a loan out on your home and you either can pay the interest or you can have the interest rolled up into the loan. And this is the most commonly arranged type of equity release. The other type are home reversions. And with a home reversion, what you do is you sell all or part of your property, but you're still able to live in your property. With lifetime mortgages, there are different ways in which you can arrange it. So you can have what is called a roll-up lifetime mortgage. This provides you with a tax-free cash lump sum. There are no monthly payments for you to make, but there is interest on the lump sum and it's added to the loan. And this will eventually be paid when you sell the property or from your estate when you pass away. Or you can have a lifetime mortgage in which you pay the interest as you go along as monthly payment. The benefit of paying the interest on a monthly basis is you don't suffer from cumulative interest, but the downside is there is the ongoing need to service the cost of a loan. However, if you do arrange the mortgage on an interest payment basis, you can change it in the future into a roll-up plan. And the third option is called a drawdown lifetime mortgage. And what this does is it allows you to draw on a predetermined reserve of tax-free cash as and when needed. The benefits of this is that you only pay interest on the funds when you actually draw it from the reserve account. So this gives you the security of knowing that you have access to additional funds, but without having to pay interest until it's accessed. An important feature which applies to most lifetime mortgages is a no negative equity guarantee. What this means is the amount which is ultimately repaid will never exceed the value of your property. Products which meet the Equity Release Council product standards are required to have this feature. Home reversion plans. With a home reversion plan, you can sell all or part of your home in return for cash lump sum. This can provide you with a regular income or both, and you are still able to remain in the property. With home reversions, you usually don't pay rent, or if you do, it's a minimal amount. When your property is sold, the reversion company gets the share of the property which they own, leaving you with the rest to go towards your estate. So, when might you consider equity release? Well, there are a variety of reasons. One reason is it's becoming more common these days for people to go into retirement and still have a mortgage, but no longer have the income to pay for it. So what a lifetime mortgage will allow you to do is clear your existing mortgage when you don't have an income. Another common reason is just to improve on your standard of living. You may have enough to live off, but you can't afford to do everything you want, which might be home improvements or it might be certain travel plans. So it just allows you to do more. And a very common reason can be, and this is becoming increasingly common, is to help family members out. Equity release allows individuals basically to pass on their inheritance in their lifetime so that their family members can benefit from it at a time when they most need it. Plus, you get to see your family members enjoy your inheritance, which is an extra benefit. I've had quite a few friends and colleagues who I've helped their parents arrange equity release for this very reason, so that they can help their children out, whether it be to get onto the property ladder, to be able to move into a larger property, and also to help pay for grandchildren's school fees. So, as I've discussed, there are many different types of equity release, and there's a lot to consider. One thing that's good to know is they are regulated products. They are regulated by the Financial Conduct Authority. There are also some safeguards which are provided by the Equity Release Council. So the Equity Release Council promote safe equity release products and safeguards the interest of home owners. Lenders can subscribe to the Equity Release Council, and if they do, their products have to include certain features such as the no negative equity guarantee, which I've previously described. What's very important is that if you're looking at equity release, you should get financial advice by someone who can provide it, and you will also need to get legal advice. I myself am a chartered financial advisor and I am qualified to provide advice on equity release. Now, you probably have noticed that demand for equity release is increasing. It's something that you hear a lot more about. You might have heard friends or family talking about it or considering it. And really, why is equity release increasing? Equity release has been around for a long time, and what's caused this well, it's increased over a number of years. What's caused this increase? To start with, pension savings have not kept up with life expectancy, leaving many people struggling to maintain their lifestyle in retirement. And for lots of people, their most valuable asset is their home. So equity release allows them to draw on their home without having to move. Coupled with this, products have become more flexible. There's a lot more choice and you can fit it to your specific needs, which might not be to fund your retirement, as I've previously discussed. Another key driver is the interest rates which are now available are significantly better than what they used to be. Interest rates are at the lowest they have been since the Second World War. And in terms of lifetime mortgages, just within the last 5 years, there's been a notable reduction in the interest rates which are available when arranging a lifetime mortgage. So, in summary, I hope this presentation has given you more insight into what equity release is and when you might consider it, explain the reasons for the increased demand for equity release, and highlighted to you that it's important to seek financial advice when arranging equity release. What I'd suggest, if this is an area which you want to look into, is if you have a financial advisor, first speak to them, see how it fits in with your overall financial planning. If then your financial advisor is unable to actually provide you advice in this area, I'm more than happy to discuss this with you. My contact details are below, and indeed, if you don't have a financial advisor, please feel free to contact me.